Hi everyone, today I'm going to discuss on the accounting for shares. Before actually I delve into the actual topic, let's visit our stock exchange of Bhutan, that is the Royal Security Exchange of Bhutan, and see the live example of some of the shares that is plotted on the stock exchange. If you see above, the numbers which are moving actually is the live prices of the shares that are traded in the stock exchange. If we see the list of companies who have plotted shares in the stock exchange, you will find under listed script, and these are some of the companies, public limited company, who have plotted shares through this stock exchange. Any public limited company can plot their shares through this stock exchange. There are arrows representing increase and decrease of shares, while the red arrow represents a decline in value of shares. The green arrow is representing increase in value of shares. This is the live example from the stock exchange where companies have issued the shares and traded in the stock exchange. In this lesson, let's explain the purpose of issuing shares, discuss financial instrument, past journal entries to record issues as well as purchases of shares, the record payment receipt of dividends in the books of the companies, and finally let's present share capital and financial assets in the financial statements of the company. This is the statement of financial positions reported by Bank of Bhutan as at 31st December 2022. If we look at items under liabilities, you will find share capital. Bank of Bhutan has issued around 3 billion worth of shares, in which 8% of shares is held by our government of Bhutan, and 20% is held by the State Bank of India. At the same time, if you look at the asset side of the statement, you will also find other financial assets, which means around 704 million worth of investment has been made by Bank of Bhutan in the securities of other companies. Now let's have some common understanding on the concept of shares. A business entity which is registered as a public limited company can issue shares to raise the intended amount of capital from their investors. Shares once issued in the primary market in the form of IPO, initial public offering, retraded in the secondary market. And the example which we have seen earlier in the website is the trading taking place in the secondary market. Equity investor may be paid dividend, which means not definite that they are going to get a dividend every year. It is paid only out of the profit of the business. The amount to dividend paid to the investor will depend on amount of distributable profit. That means deducting all other expenses and profit which is remaining to distribute it. And investors do not have right to claim the dividend in case business has not generated sufficient profit. Even the business may not pay dividend to the equity investors, even if the entity has generated sufficient profit, because the entity may like to retain the distributable profit in the business and invest the fund in other profitable business so that business become sustainable. Let's have some concept of a financial instrument. If you want to explore further and read further on financial instrument, it is given under verse 39. If you are browsing online, you may browse as IAS 39. You will get more information. What is a financial instrument? Financial instruments are notes, documents, or certificate that carry a promise to pay or receive a certain amount of money after a certain period of time. The financial instrument involves two or more parties, where one party promises to pay and another party will have right to receive that amount from a party who promises to pay the amount at a certain time. The promise to pay and right to receive the payment does give rise to a contract. That is an agreement that one party promises to pay and other party has right to receive the payment on a certain time. Once the contract is created, then it becomes legally enforceable, especially under the Country Act of the country. Therefore, equity share is a financial instrument and generally it is called an equity instrument. For example, Bhutan Insurance Limited issues 100,000 shares in Newton 10 on Royal Security Exchange Limited to raise funds. Can you raise to a contractual agreement? Who are the parties here? The contractual agreement established between the BIL and investor investing in the company's share. The legitimate contract will be established as when the shares are allotted and share certificate is issued to the investors. Let's also look at financial assets and liability. When a company invests in a share of another company, it is an investment and reported as financial asset. And for another company, it is a financial liability. One who issue for their company, it becomes a liability, and the company which purchases the shares of another company, for them it is reported as financial asset. As and when the contractual agreement is signed between the two parties, the instrument meets the recognition criteria and must be recorded in the books. And financial assets and liabilities are de-recognized when the contract is settled or when an entity ceases to be a party to the contract. Now let's look at the accounting in the books of issuing company. That is the company which issues shares to the public. Taking the same example of BIL issuing 1 million share at the rate of 10, it will be recorded as, if the shares are fully subscribed and allotted, the company will record them as bank account related to share capital. For the issuing company, money received on share is a liability. The shares of the share capital of Niltam 10 million will be shown under the liability of the statement of the financial position. Thus, the share money of Niltam 10 million for BIL is a financial liability. On the other hand, how do investing company record in their books of accounts? Let's assume that a company called KCT acquired 100,000 equity shares of BIL at Newton 10 per share in April 2022. Okay, this is the face value of share. However, these shares were traded at Newton 13 on the stock exchange in December 2022. And KCT company measured the shares on 13 December when the company was finalizing its accounts for 2022. Let's look at how it is recorded in their KCT company's books. Okay, so when they invest in shares, they get financial assets and they have to pay cash of 1 million, that is 100,000 times 10, being acquisition shares from BIL. Note, the KCT company will measure the equity instrument initially at 1 million, which is the fair value of the shares at the time. However, in the month of December, the company share is being traded at 13 per share, and the difference in the carrying amount needs to be taken to the income statement. So initial carrying amount was how much? 1 million, and the fair value in the month of December is 1,300,000. Change in fair value of 300,000 will be transferred to income statement by passing entry financial asset accounted to income due to change in fair value of 300,000. In the statement of financial position at the 31st December, under financial asset, equity instrument will be reported at Niltam 1,300,000 instead of 1 million. Now let's look at how company records the payment of dividends. Now let's assume that BA is declaring dividend of 10%. When dividend is declared and immediately if it is paid in cash, it is directly recorded as dividend account added to cash account. However, the dividend accounts will not appear in the financial statement because it's a temporary account, and it will return off by passing into retained earnings account added to dividends account. So dividend is paid out of the retained earnings. The retained earnings will reduce by the extent of dividend paid. However, in reality, there will be time gap between dividend declared and the dividend paid. When immediate cash not paid, the company pass entry dividend account added to dividend payable account. And when dividend is paid, they pass entry dividend payable account added to cash account. Similarly, the dividend account will return off by passing entry retained earnings account added to dividend account. So here as well, the dividend paid will reduce the retained earning. So that's all from my side. Hope you have understood how company accounts the issue of shares, investing in shares, and also the recording of dividends paid. If you have any queries, please mail me at following email address. Thank you.